When you guys are trading, it's very important for you to think like an institution. And if you start thinking the way they do, you can start trading like them, and you guys can start consistently finding a good strategy and ways to extract decent profits out of the market every day by having small losses and much bigger winners. So these institutional traders are the ones that actually move the market. They have unfilled buy orders and unfilled sell orders sitting at levels waiting for price to enter that zone to get filled for another leg higher or for another leg lower. Majority of retail traders do not think this way because they do not understand the mechanics of the market and basically how the prices get affected in any market. This has to do with real estate, with the car market, any market where there are buyers and sellers. Supply and demand is what affects the market and what really changes price. So it only makes sense that the stock market, the prices change because of supply and demand. Do you have more buyers? Do you have more sellers? What is the scenario that's playing out that's causing price to move? And in this case, with this strategy, the supply and demand strategy, we have unfilled buy orders sitting at demand and unfilled sell orders sitting at supply from institutional traders because of the fact that I personally know retail traders cannot move the stock market. They do not trade with any amount of size that could influence a stock price rising, $10, $20 to the upside. Institutional traders make up a good portion of the market. Their money, their size trades that they're entering is what affects the supply or demand equation, and it makes massive imbalances. So today we had Roku. We had a daily demand zone at 108. I'll show you a daily chart. We have the demand zone that formed on the 414 candle. Fast forward now to a 4-hour chart, actually to a 1-hour chart. On Friday, we basically hit the demand and bounced immediately. Second test, hit demand, bounced immediately. So as a short-term trader, as a day trader or scalper, does not matter, you could have taken this long, and personally, the chat took this long on Friday at this bounce right here and took profits at 15-minute supply, which is up here. This is the first test of the level. Second test is when we double bottomed and then rallied from the double bottom. But I want to explain this recap to today because this is where I think retail traders struggle the most. A lot of retail traders, I get a lot of messages, I got a lot of DMs on my Instagram. And if you're not following my Instagram, I'll link that in the description below. Make sure to follow that because I post recaps all the time and I post really good trade breakdowns and just stuff that you guys can learn off of on my Instagram. So go follow it in the link below. But retail traders, in my opinion, struggle because they're too busy worrying about buying breakouts or shorting breakdowns. It's very simple. Anybody could draw a support line on their chart and any trader could go hit the short button or buy puts. And it's just a textbook type of play that you'll read in books. It's a textbook play that majority of traders on YouTube teach. Breakouts, in my opinion, do not lead to consistency. You'll win on breakouts. I'm not going to say that you don't win on them. But your consistency with them, you're going to have higher losses and much big dollar amount losses because of poor risk management than you are going to have with larger winners doing breakdowns. So here we have a support level, bounced here, came down, retested it, bounced it again. So now we have a valid support level. I extend that to the right. And now today, fast forward to price, here's what happens. Let's completely ignore this daily demand zone. And we have now momentum traders that are looking to short the breakdown below a support level. Watching the level 2, watching a 1-minute chart, and they have their puts ready to scalp a breakdown below a major key level. So what's important and what I think a lot of traders struggle with is that is not the right way to trade. You have to ask yourself, who is on the other side of my trade? When I'm shorting something, who is buying? And when I'm buying something, who is shorting something? For every seller in the market, there's a buyer, and for every buyer in the market, there's a seller. So you always have to ask yourself, who is on the other side of my trade? So if I short this breakdown now, looking at a 1-minute chart, extended volume, this looks like it's going to break down to the long side, and traders, retail traders, are taking this short right here. 2-3 candles later, a complete reversal. Traders are stopping out here. I hope they're stopping out here if they have a proper risk management plan. But if you did not stop out there, look at that reversal to the upside. as soon as price broke below low a day. That is a classic trap for retail traders. They break it below low a day, they get liquidity here from short orders, and their liquidity from those short orders enable these buy orders from institutions at this level to get filled, and then price then rallies to the upside, and these institutions win solely because of the fact that retail traders are selling at this breakdown. So if you understand supply and demand levels, I know when we're in demand, I'm never looking to short anything. I'm never looking to buy puts on a breakdown below a key level because of the fact we're in a strong, valid demand zone. Same thing for supply. If price is rallying, I'm not buying any breakout to the upside if I know we're inside or nearing a supply zone because we have unfilled sell orders sitting at that area. So, like I said, a lot of traders would have taken this major support break to the downside, bought puts, providing liquidity for those institutions. But because I knew we're in a demand zone, I did not touch this short. And in fact, I actually took this long this morning at the 108 level. I was watching it. I actually put it in the Discord room. I was watching and I said, they break it below Friday's lows. So retail chases a breakdown short. They do not realize they're shorting in an area where we have a buy imbalance and now $3 higher. Nice trade so far. So price came into the imbalance, bounced at 108 level, and was a nice 3-point trade to the upside solely for the fact that we need those people shorting this breakdown right here for price to then rally to the upside after those buy orders get filled. Now, the next trade was the S&P 500, the E-mini future, or SPY if you trade options. We had a nice 15-minute supply zone. Now, what I liked about this was that the market sold off in the morning, relief bounced, created supply in this area, then price then sold off, rallied back into the origin location of the sell-off, and we took this short at this yellow circle here, putting our stop loss above the supply zone, and putting our take profit zone area at 2994. So I'll take this trade all day long because my risk is so small and my reward is so high if I'm right. I'm risking 3 points, 4 points to make 16 points to the downside. So I'm really focusing on a 4-to-1 risk to reward. I could lose 4 times and my one winner will break even those 4 losers. So I'm comfortable taking these trades all day long. And as you guys can see, if you were patient, this is a 5-minute chart. So we chopped pretty much for an hour at the supply zone. But if you stuck to the plan, put your stop loss at high a day, take profit at the demand zone, it would have paid big. So I put this also into the chat room that I would love a move into 15-minute supply at 3010 to get short into, which was a 4-point risk. And here we have 15-minute supply before we rallied into it. And then we rallied, took it short. And I know a lot of members actually made money on this. But here's my plan, short 3010, stop at 314, take profit at 2994 and under. If you trade options and you trade this current week's expiration options, which were SPX 3005 for today's expiration, these moved from $1.20 to $17.80, which is $1,200 will make you $17,000, or $120 will make you $1,700. So exponential gains if you shorted at supply and took profit at demand. But now that's talking about hindsight. Probably would have sold a little sooner once we got this wick at 1 hour demand. But that's just talking about if you held from supply all the way to lower day. So this was a great trade, strictly off supply. A lot of traders will be chasing this long. This massive rally up here, I know a lot of traders chase it long. Now, if you're scalping, okay, you could have got a couple points out of it. But if you're day trading it and looking to hold for a decent sized move, getting long here is not advisable because we have supply right above. This is a brick wall that we need to break through. So this was ES, the S&P 500, great trade. And also Roku today was also great trade, all from supply and demand levels, all from knowing how institutions trade, knowing to profit off of them, and basically staying on the side as these institutions are. And you could definitely make a lot of money and come up with a very good system if you do it this way. Stop buying breakouts, stop selling breakdowns.